Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company with a name that sounds like it's trying to sell you antivirus software from 2005. But trust me, the real story inside this report is much more interesting, and it does involve money. And a few surprises. VerifyMe just dropped its annual report, and after a quick skim, it's clear this company is trying to juggle quite a few things. We're talking about sensitive shipping, brand protection, and some big changes in their business deals. VerifyMe is trying to be two main things: a specialized logistics company, which means they handle shipping and delivery, especially for things that need careful temperature control, and a provider of brand protection, helping companies fight counterfeits. It's like having a delivery service mixed with a detective agency for brands. They operate with two business models for their sensitive shipping business. One is proactive service, where clients pay them directly for shipping help. The other is premium service, where they offer complete shipping monitoring, either directly to clients or through a partner. It's like choosing between regular mail and the white glove treatment for your precious cargo. Now, let's address the elephant in the room, the economy. Carriers are slashing costs, and there's talk of a global recession. They've seen a softening in demand for some high-end perishable items. People are spending less money. But the company thinks that internal cost-cutting measures in the major shipping companies may benefit outsourced service providers like them. One big challenge is their reliance on a single key partner for shipping and customers. Sales through this strategic partner accounted for 16% of revenue of the precision logistics segment for the year. Their partner has started providing its own service offerings. In other words, their partner is increasingly becoming their competition. Alright, let's dive into the financial statements, the part we all want to see. The aggregate market value of the voting stock held by non-affiliates of the registrant was 12,000 on 17,073 Teddy as of June 30, 2024. That's not great. Revenue for the year was 24,207,000, a 4% decrease compared to the previous year. That's a drop of over $1 million. That's because they lost a contract, and the holiday season was shorter, impacting shipments. Imagine losing 1 in 20 customers instantly. That's the kind of impact a 4% drop can have. But here's a silver lining: consolidated gross profit actually increased to 8,662,000 from 8,026,000. That meant higher margins, which suggests that some things improved in terms of profitability. Also, listen to this statement. Indicate by checkmark whether the registrant is a shell company as defined in Rule 12b2 of the Exchange Act. X, no, that means that the company is not considered a shell company. General and administrative expenses decreased, showing that they're managing to cut down on costs. However, a deeper look reveals some trouble. There was a discontinued contract with one customer which seemed to impact reduced discretionary spending by US consumers. Plus, they sold one of their businesses at a loss of $0.1 million. This hurts the bottom line. What's worse, the company recorded big impairment charges. That means charges of $964,000 on its intangible assets and $1,351,000 on goodwill. This comes in the authentication segment because of reduced trust and changes to forecasted cash flows. It means that something they bought was not as valuable as they hoped. They owe $1.1 million in convertible debt. Now, if investors decide not to convert their debts to shares, the company might have trouble with cash. Every company utilizing technology is subject to threats of breaches of their cybersecurity programs. Although their risk factors include further details about the material cybersecurity risks they face, they believe that risks have not materially affected our business to date. They also mentioned that upon exercise of our outstanding options or warrants, conversion of our Series B convertible preferred stock, we will be obligated to issue a substantial number of additional shares of common stock, which will dilute our present shareholders. Now let's talk about who's steering this ship. Adam Stedham is the Chief Executive Officer and President, bringing a wealth of experience from Learning Technologies Group and GP Strategies. The other directors have also served in financial and management roles of various firms. They've got financial expertise, which can help with future strategies. The company's stock and warrants are traded on the Nasdaq under the symbols VRNE and VRMEW respectively, but there's a risk of being delisted if they can't keep the stock price above $1. The board also is responsible for cybersecurity risk. They have Jack Wanger Periship Global to manage cybersecurity risks. The board also believes that risks have not materially affected our business to date. Lastly, the company has a share repurchase program approved by the board of directors to spend up to 0.5 million Tata share repurchase shares of its common stock. The company had a share repurchase activity, that is, that 20,100 shares were purchased for 0.82 cents a share. So what's the overall picture? VerifyMe is at a crossroads. The core logistics business faces competition and economic uncertainty, while the brand protection segment needs a major boost. I would be concerned about their dependency on single customers and vendors. And the big question mark is now how they can really turn this company around. Whether it be more acquisitions or partnerships that really work ex-siv. Thanks for watching. Hit like and subscribe to help decode the next report.